All right, so let's dive into something that's been on my mind lately. Bitcoin and Ethereum. They're hitting these new highs, but at the same time we're seeing this global financial tightening happening. It feels a bit like a puzzle where the pieces are constantly changing shape,
Yeah.
you know?
What do you mean?
We're taking a look at the Digital Frontier Weekly today. It's a newsletter that a lot of serious investors follow. We'll break down all the jargon and get right to the core of it, what matters for you. So, the big questions we're thinking about today are we teetering on the edge of a crypto bubble that's about to burst? Or is there something more substantial going on here? And how does this global financial situation fit into all of this? Lots to unpack.
Definitely.
Let's start with Bitcoin. The newsletter mentions that it's trading way higher than its average over the past year. That's pretty good, right?
On the surface, yeah.
But then there's this thing called the Z-score. Bitcoin's is currently at 0.59. Now, I know Z-score might sound like something out of a statistics class, but basically, it tells us how unusual the current price is compared to its history.
Right.
And a 0.59, well, it kind of hints that Bitcoin's price might be getting a little bit ahead of itself.
What's really interesting here is how this Z-score relates to the whole idea of overextension in the markets. Imagine a pendulum swinging. It can only go so far one way before it has to swing back in the other direction.
Are you saying what goes up must come down?
Kind of, yeah. It's not about predicting a crash. It's more about understanding this thing called mean reversion.
Yeah.
The idea that prices tend to move back towards their average over time. And a high Z-score, it's a little like a yellow flag, tells us to be a bit cautious.
So maybe not the time to go all in just yet, especially with Bitcoin at, drumroll please, $95,904. The newsletter also mentioned liquidation heat maps. I have to admit, those were new to me. What are they? Why should we care about them?
Liquidation heat maps are a visual way to see where big investors have put their money. They show these important levels of support and resistance. Think of them as price floors and ceilings where buying and selling pressure tends to build up. For Bitcoin, for instance, the heat map shows strong resistance between $98,000 and $100,000.
So if the price hits that range, a lot of those big investors might start selling, and that could push the price back down.
Exactly. And on the other hand, there's support around $90,000. If the price drops to that level, buyers might jump in, which creates upward pressure. These heat maps are a good way to understand the market psychology, where investors are feeling bullish or bearish.
Okay, let's talk about the cost of actually producing Bitcoin, the price that miners have to pay to create new coins. The newsletter says it's somewhere between $60,000 and $85,000. Now, that range is interesting to me because it's a lot lower than the current trading price.
That difference between the production cost and the market price, it's really important. It tells us that miners are currently making a good profit. And when miners are profitable, they're motivated to keep mining, which helps secure the Bitcoin network and ensures its sustainability over the long term.
But what if the market price goes down closer to that production cost? Do miners just stop everything?
Not necessarily, but they might start selling more of their Bitcoin to cover their costs, and that could put some downward pressure on the price. So this production cost range acts like a sort of price floor, a level that Bitcoin probably won't fall below for very long.
Makes sense, like a safety net in a way.
Yeah.
But nothing is guaranteed in crypto, right?
Of course not. That's why it's crucial to look at all these factors: price trends, market psychology, the underlying economics of Bitcoin, to get a more complete picture.
Okay, let's talk about the emotional side of the market for a bit. The newsletter mentions the Fear and Greed Index. It measures how the market is feeling. Right now, it's at 79, extreme greed. What do we make of that?
Think of it like this. When people are fearful, they tend to sell, which drives prices down. When they're greedy, they're more likely to buy, which pushes prices up. And looking back, these extreme greed readings have often been followed by market corrections.
So it's like everyone's gotten a little too excited and a reality check might be coming.
It's definitely possible. Now, this doesn't necessarily mean a crash is inevitable. It's just another piece of the puzzle to consider.
All right, let's move on to Ethereum. It's also doing really well right now, trading at $3,364. But here's where things get even more interesting. Ethereum's Z-score is a massive 2.82. If Bitcoin's 0.59 was a yellow flag, what does this tell us about Ethereum?
Ethereum's Z-score suggests that it might be even more overbought than Bitcoin, meaning its price is even further away from its historical average. Looking at the liquidation heat maps for Ethereum, we see major support around $3,300 and resistance near $3,500. These are the key levels to watch in the short term.
Okay, now let's dive into the deep end. Global macro liquidity, basically. This is about how much money is flowing around in the global financial system. And here's the thing. That flow has been shrinking lately. Global liquidity is now at $172.5 trillion.
And the reason for that shrinking liquidity is mainly because of what central banks around the world are doing. They've been tightening monetary policy, which basically means they're reducing the amount of money they're putting into the system.
So it's like someone's slowly turning off the faucet. And that affects everything, including crypto.
Exactly. When there's less money around,
Hmm.
investors tend to get more cautious. They might pull money out of assets they see as riskier, like Bitcoin and Ethereum, and move it into safer assets, like bonds.
To make things even more interesting, the newsletter talks about this concept called the shadow monetary base. It just dropped by a huge $2.56 trillion.
Yep.
If global liquidity is the swimming pool, this shadow monetary base is like the deep end.
That's a good analogy. The shadow monetary base is a broader way to measure liquidity. It includes the traditional money supply, but also certain types of credit and financial instruments. And that sharp drop, well, it backs up the idea that things are getting tighter. And that could create some headwinds for risk assets like crypto.
So less liquidity means more caution. That's what we're seeing so far. But how does this actually play out in the markets? What's the connection to Bitcoin and Ethereum prices?
Well, one way to see this connection is through something called the MEVE index. It measures how volatile the bond market is. And we often see that as liquidity decreases, the ME index goes up. It signals more uncertainty and volatility in the financial system.
And that uncertainty can spill over into the crypto market.
Exactly. Investors might start selling their crypto to reduce their overall risk, which could lead to price drops. It's all interconnected.
So we have Bitcoin and Ethereum at record highs, but with some potential warning signs too. Overbought conditions, shrinking liquidity. It's a mixed bag. Where do we go from here? What are the important things to keep an eye on in the coming weeks and months?
I think the next few weeks will be crucial. We need to see how Bitcoin and Ethereum react to these tighter financial conditions. Will they keep going up or will they come back down? And what role will those global macro trends play?
We've covered a lot of ground in part one. We've looked at the technicals, the psychology of the market, and the looming presence of global macro trends. But there's more to come.
Oh, yeah.
In part two, we'll go even deeper into those global macro forces and explore what they could mean for Bitcoin and Ethereum. And of course, what it all means for you. Stay tuned.
So we left off talking about some potentially concerning signs for Bitcoin and Ethereum, but there are always two sides to every coin.
Right, we need to look at both sides, the risks and the opportunities. Let's play devil's advocate for a minute. What if, even with these warning signs, Bitcoin and Ethereum don't crash? What if this is just a little bump on the road to even bigger things?
That's a question that keeps a lot of investors up at night. And it's definitely possible. Both Bitcoin and Ethereum have some pretty strong fundamentals backing them up. They're decentralized, secure, and we're seeing more and more people and institutions using them globally. This growing adoption, it could really help support their prices, even if there are some bumps in the road.
So even if there's a dip or a correction, it might not be the end of the world.
Exactly. In fact, for those who are in it for the long haul, a price drop could actually be a good time to buy.
Okay, now you've got my attention. Tell me more about this buying opportunity.
Remember that Bitcoin production cost we talked about? That range of $60,000 to $85,000 if Bitcoin drops significantly, closer to that range. It could be a signal for smart investors to buy more Bitcoin at a lower price.
Like a buy low, sell high strategy.
Basically, yeah. Of course, timing the market perfectly is incredibly difficult, but understanding these factors can help you make better decisions.
But what about that shrinking global liquidity we discussed? Won't that keep putting pressure on Bitcoin and Ethereum prices? It seems like a pretty significant force.
It's a valid concern. But here's the thing about global macro trends. They're always changing. What seems bad today could be good tomorrow.
So we have to stay alert and look for any signs of a turnaround.
Exactly. Keep an eye on things like central bank announcements, economic data releases, any major geopolitical events. These can all impact global liquidity, which then affects the prices of Bitcoin and Ethereum.
Okay, so we've got these short-term warning signs, but also the potential for long-term growth. And even some buying opportunities if the price dips. It's a lot to think about. I guess what I'm getting from this is it's more crucial than ever to stay informed and make smart decisions. We can't just blindly follow the hype or panic when things get a little rough.
Absolutely. It's about doing your research, understanding both the risks and the rewards. and having a strategy that fits your investment goals and your risk tolerance.
This deep dive has been quite the ride. We've gone from celebrating record highs to thinking about a potential crash, exploring global liquidity, and even talking about buying opportunities. But with all this complexity, one thing is clear: Bitcoin and Ethereum are here to stay. They're changing the financial world, and they'll likely keep playing a major role in the future of finance.
I totally agree. The crypto world is always evolving. And while volatility and uncertainty are part of it, there's also huge potential for innovation and growth.
So, what's the one thing you want our listeners to take away from all this?
If you're feeling a bit overwhelmed by all this information, remember this: you don't have to be a crypto expert to get involved. Start by educating yourself, stay curious, and don't be afraid to ask questions. Most importantly, investing is a marathon, not a sprint. Be patient, stay informed, and never invest more than you could afford to lose.
Well said. This has been an incredible deep dive. But we're not done yet. In part 3, we're going to go beyond the numbers and look at the big picture. What does the future hold for Bitcoin and Ethereum? Will they continue to do well? Or will they face challenges from regulations and competition? Stick with us, and we'll explore those questions together. We've been looking at a lot of market trends and, that global liquidity stuff. And now I'm thinking about the bigger picture, like what's next for Bitcoin and Ethereum? Will they keep leading the way in finance, or will they kind of fade away eventually?
That's the million-dollar question. And frankly, like a lot in the crypto world, there's no simple answer.
So no crystal ball predictions for us today.
Not today, I'm afraid. But we can definitely look at some major trends and forces that will probably shape the future of these digital assets.
Okay, so what should we be paying attention to?
Well, one big thing is regulation. Governments everywhere are still figuring out how to deal with cryptocurrencies. Some are totally embracing them, while others are a bit more hesitant, even skeptical.
So it's like this back and forth between encouraging innovation and keeping things under control.
Exactly. And how these regulations end up will really impact how Bitcoin and Ethereum can be used and traded. Too many rules could stifle innovation, but too few could create instability and even open the door to fraud.
It's a tough balance. Anything else we should be watching?
Oh, yeah. Another key factor is competition. Bitcoin and Ethereum might be the big names right now, but there are lots of other players in the game. New cryptocurrencies and blockchain platforms are popping up all the time, each with their own special features and advantages.
So it's a dynamic landscape with new challengers coming in all the time.
That's a great way to put it. Some of these new ones will probably disappear, but others could really challenge Bitcoin and Ethereum, especially if they offer faster transactions or lower fees, or, innovative solutions to technical problems.
Sounds like an exciting race to watch. But what about everyday investors like me? Should we just wait and see who wins?
Not necessarily. Remember, uncertainty can also create opportunity. The key is to stay informed, diversify your investments, and be ready for the ups and downs that are inevitable in a market like this.
That's always good advice. Looking ahead, are you optimistic about the future of crypto?
I'd say I'm cautiously optimistic. I do believe that blockchain technology has the potential to completely change a lot of industries, not just finance. We're talking healthcare, supply chains, even voting and government. And I think Bitcoin and Ethereum, as the pioneers, are in a good position to benefit from that growth.
But it's going to be a wild ride, right?
Absolutely. There will be bumps and unexpected turns. But that's also what makes the crypto world so exciting. It's constantly evolving and full of possibilities.
And that's what we're all about on the Deep Dive. Exploring these complicated topics and breaking them down for you so you can make informed decisions.
That's right.
No matter what the future brings.
Knowledge is power, and we're here to give you that power.
All right, so we've taken a deep dive into the world of Bitcoin and Ethereum. We've looked at where they are now and what might be ahead. We've talked about market trends, global liquidity, regulations, and competition. But this is just the beginning. We encourage you to keep learning and stay curious. The crypto world is always changing.
Yeah, for sure.
The only thing that's constant is change itself.
I like that.
Remember, what we talked about today is just one perspective. Talk to other experts and analysts and enthusiasts. Challenge your own ideas and come to your own conclusions.
Absolutely.
That's the best way to navigate this exciting, sometimes confusing, but always fascinating world of crypto. Thanks for joining us on the Deep Dive. Until next time.
Happy investing.